Hi, my name is Rinzhou Sun, student number 310-99955. This is the second part of take-home exam for merger and acquisition. I will be representing my team to conduct acquisition report for Breville Group. It is one of the best-known small appliances companies in Australia. We will start with acquire Wesfarmers first. Wesfarmers is the largest conglomerate company in Australia. As we can see, it owns many companies in different sectors. It owns two major retail brands, Bunnings and Kmart. Recently, it acquired online retailer Cat Group and divesting from Coles. Overall speaking, Wesfarmers has been performing well. We will more focusing on its retail segment. Strong revenue and EBIT growth in Bunnings and office work. Although revenue is stable, however, Kmart Group profit have been fluctuating due to the competition level. We think Wesfarmers retail segment is in transition period. It's now more focusing on investing in online retailing instead of traditional department store. Outlook in the retailing segment is largely depend on whether this transition succeeds or not, and also depend on other huge investment in the future. In the aspect of target, Breville Group is known by its premium coffee machine and small appliances. It has two segments, global product distribution segment. Breville revenue has been showing a double-digit growth in the global segment. Some business reports have commented that Breville could potentially immune from the pandemic impacts. In March, the company did withdraw its full-year earning guidelines, but the management also reaffirmed a strong position, and the sales have been trending up. We will expect some impact in sales in the second half year, but we believe it is reasonable to make assumption that the company would reach a 20% revenue increase this year. Now for Breville's cost of capital. We estimate cost of debt at 1.29% using its synthetic credit rating. We estimate its equity risk premium according to its market risk exposure. We use peer companies' beta to estimate its beta and then conclude WACC is around 7.95%. For valuation, we use two methods to value Breville. The first one is DCF method. Three-stage model was used. Since Breville is currently in a high growth period, we assume sales would increase 20% for 2 years and then with a cooling off period for 3 years with 10% growth, and finally it will reach stable growth with 3% growth. We value Breville fair value at $44.58 per share, and we also calculate its control premium at $124 million. Assuming 10% EBIT increase for the acquisition synergies, the valuation would increase to $49.92 per share. According to current market price, the company is undervalued. For the sensitivity analysis, we think share price are highly sensitive to its revenue growth. We estimate its growth from 3% to 22%. It would give us price range from $27 to $65, almost 140% difference. And for relative valuation, we use EV/EBITDA multiples because it excludes taxation and depreciation effect, so it will give us a better picture about the company's financial performance. We use 5 small appliance companies with the same market exposure and market cap range from 1 billion to 10 billion as comparables. According to the relative valuation, Breville value is ranging from $812 million to $1,025 million. According to the current market price, Breville is overvalued. So why is it different? What's the reason for the low valuation? We have concluded in the following slides. The value for the valuation difference is because we believe Breville is a relatively young company and still in a growth phase. However, our comparable companies are mostly stable stage. The relative valuation will not correctly factor in its high growth rate, so that's why it's a huge difference. We believe Breville would be a good acquisition target for Wesfarmers, since its outstanding financial performance in recent years, in EBIT growth and its profit margin control, and it also can have some diversification effect for Wesfarmers too. The acquisition will generate synergies in both revenue and cost effect. For the deal structure, we recommend Wesfarmers use 60% cash and 40% equity, as Wesfarmers now is cash rich from the divestment, and Wesfarmers could also issue debt to finance the deal as current debt level is relatively low and the interest rate is very favorable. There are laws and regulations that govern M&A in Australia. Australia Corporation Act 2001 is for one regulations, and many entities that might involve two, including ASAC and ACCC. Sometimes takeover panels will involve when there are disputes, but we do not think there are so many issues with regulations. Since we started the previous acquisition Wesfarmers conducted, there are more red flags than the previous acquisition. But in the end, it all get a green light from the regulators. So we do not think it is a very tricky acquisition from the regulation aspect. According to our research, Breville shareholder would welcome the acquisition, as Wesfarmers would provide better platform for its sales in Australia and New Zealand market, and it would be easier for them to fundraise in the future if needed. There might be some concern too, but we are not going into the details. However, if Breville is not willing to sell, they might use important sale strategy to dilute its shares and may seeking a one night. In the end, the result will be the same. It would discouraging Wesfarmers to continue making an acquisition attempt because the deal would incur so many expenses that would be financially suitable anymore. In terms of market reaction, we believe Breville shares would go up due to the acquisition premium, and for Wesfarmers, there will be a down and up situation because some investors may feel the acquisition is overpriced. But overall, it is great for Wesfarmers long-term interest, so the share price will go up in the end. To sum up, we do recommend Wesfarmers to acquire Breville Group, as Breville would improve their business in both operation and financial aspect, and it fits for Wesfarmers long-term interest. There are potential synergies that could create value for Wesfarmers shareholder too.